What is going on, guys? It is your boy, Mr. Banks, coming at you live with another trade recap. Now, guys, we hit meta for 150% right out the gate today. We also hit AI for almost 200%. Now, today I want to go over a strategy that I have created that helps new struggling traders become consistently profitable. It's also good for intermediate and advanced traders as well. Now, I created this strategy for everyone to help learn price action, right? Price action is key. You hear a lot about it. So I created this strategy. It's almost like training wheels, if you will, on a bike. It's going to show you how to actually take trades based off of levels and just using the chart and price action only, thrown in with a little EMAs to help guide you to understand how to trade these levels. Now, go ahead and hit that like and subscribe button so you don't miss any of the educational content I put out on a daily basis. So now let's go ahead and get started here, guys. This is going to be a good one. Now, we are going to go over meta. We did hit AI, but I think meta is really a picture perfect trade setup that I can explain to you, that you guys can understand the strategy very, very well. It was a plus setup today. Now, of course, it had the news with threads, but beyond that, it was still an A plus setup. Now, as you guys can see, we do actually take these trades. So this was a live trade in the Discord. The team absolutely ate today. But let's go ahead and get started on the strategy. It is called the BBR strategy, right? It is called the BBR strategy, and it stands for bounce, break, and reject strategy. Why do I call it that? Why is it named that? Well, if you know me, I like to make trading as simple as possible, right? I want to make it as simple as possible. There's a lot of people that want to just use big words, throw out stupid harmonic patterns and all this stupid shit. Make it simple. All stocks do is just trade level to level. That's all you really need, right? All you need is price action and your levels, and you're good to go. Stocks do three things, right? They bounce on a support, they reject a resistance, or they break through a support or break through a resistance and then go find another support or another resistance, right? That's all they do continuously over and over and over again, guys. That is all stocks do. Is a very simple concept you should and need to understand. Do not overcomplicate trading. There is enough people out there trying to overcomplicate this when it's actually a very simple construct. Stocks trade level to level, and they do three things trading level to level. They bounce on a support, they reject a resistance, or they break through a resistance or break through a support to go find another resistance or another support. That's it. That's all they do, guys. Understand this concept. Now, what we're going to be using with this strategy is EMAs. Now, I know a lot of people hate EMAs and they get to heat. Now, when I trade, I don't use EMAs unless we're in a trend, and I'll throw on the 8th EMA just to follow a trend. But other than that, I don't use EMAs. But I designed this strategy so that you guys can understand when stocks are trending or when they are ranging. And if they're in a range, best to not trade. We want to get a stock that is actually trending. So I use the EMAs as training wheels for you guys. So eventually you won't have to use the EMAs, but they are a good guide to get you to understanding price action. And that is the reason for this strategy and why I created it. Now, let's go ahead and get to the chart. We're going to go over meta, why we took the trade today, and how you could use this strategy to start understanding price action better. Now, as we all know, the 200, right? The 200 moving average on the daily. I think even if you're not a moving average trader, we all can respect that the 200 is a very massive moving average on the daily. I think every single trader can respect that. If we're above it, that means we're bullish. If we're below the 200, we're in bearish signs, right? Bearish below 200, bullish above 200. Now we can use the 200 actually on all time frames. And so we do use the 200 in the strategy, the same as if you would on the daily time frame or larger time frames. If we're above the 200, that's going to be bullish. If we're below the 200, that's going to be bearish. So now this blue line right here is going to be your 200. And we do use EMAs versus SMAs. And the reason for EMAs is because they play to the most recent price action versus SMAs don't play to the most recent price action. So if we're day trading, right, you want to have moving averages that are averaging to the most recent price action, and that's what EMAs do. So with the 200 again, if we are above the 200, just like the daily, we are bullish. If we're below the 200, we are bearish, right? So same thing. And again, we are using the 5-minute or the 2-minute time frame. And I'll get into why we use the 2 and the 5 to make our entries here in a little bit. But we use the 2 and the 5 time frame to at least make the entries. Now, the next thing we're going to use on EMAs is going to be the 13 EMA and the 48 EMA. The 13 and the 48 EMA. Why do I use these? Well, the 48 EMA has been around for years. I actually heard about it first on a Yahoo Finance article back in, I believe, 2015 or 2014. It came out with the 48 as being the ultimate cross, right? It's being the ultimate sign if it crosses up or below the 48 as a big trading moving average. So I've actually been using this for over 5 years now. 13 crossing the 48, it is very similar to the 921, but the 48 it holds more weight than the 21. So that is why we use it. So 13 crosses the 48 up, the same as above the 200. If the 13, 48 cross up, that is bullish. Now, if the 13 crosses the 48 down, that is bearish. And quite simply put, right, if a smaller one crosses a bigger moving average, right, whether it's the 9 over the 21, the 50 over the 200, right, those are always bullish signs. Likewise with this, 13 and a 48. Now, if the 13 crosses the 48 down, that is going to be bearish, right? So again, super simple. Cross up, bullish, down, bearish. I mean, it's the same as way the stock is going, right? If we're going down, that's bearish. If we're going up, bullish. Super simple, right? Above pre-market is a bullish sign, right? So we break and hold above pre-market, that is a bullish sign. If you also break and hold above yesterday's high and pre-market, super bullish sign. Why? That's showing you that there is demand there. It's showing you that there are buyers stepping in. So if we can break above pre-market high, if we can break above pre-market high and yesterday's high, right, that's showing you that there's more buyers there. There's more demand than even yesterday. So more than likely, we're going to break out and head up, at least for a little bit, at least for a good gain, right? So coming into this meta trade, let's zoom out now. Now we went over the main bulk of the strategy and the EMAs we use. I'll go over them one more time for you guys. 200 we use as the long-term trend. So if we're above the 200, bullish. If we're below the 200, bearish. 13 crosses the 48 up. It's going to be showing you if the stock is actually trending one way or trending down one way. If the 13 crosses the 48 up, that is going to be bullish. If it crosses down, that is going to be bearish. Pre-market, yesterday's high, and also pre-market low and yesterday's low is going to be the same thing if we were taking a downward trend, right? In this instance, we're taking an upward trend. So just think about if we were taking this to the downside and the trend was down, and of course we'd be using the pre-market low and yesterday's low instead of the pre-market high and yesterday's high, as in this instance. So now let's get to the levels part. Let's get to levels. We're going to go over how do we find our levels. Now, one of the biggest things I like to use when it comes to levels is going to be the 1 hour time frame. The 1 hour time frame. Why do I like the 1 hour time frame? Because it is big enough to show me the bigger picture, but it is still small enough to at least give me enough candles to give me some nice ranges, some nice support and resistance levels. Now, when you're starting to get to the 4 hour, the daily, obviously the weekly, Those are big levels and are big support and resistance levels that you can find there. But I find the 1 hour to be the best at really finding these breakout or breakdown levels. Now I had 291 as the level, right? 291 as this level today. How did I find that? Well, again, I'm using the 1 hour. So what is happening here? We had 285 as a big level, right? Big support resistance flip. We can see that clear as day here, right? Resistance, support, resistance, resistance, turn to support, turn to resistance, right? And now we're finding this as support. So it's a big support resistance flip level. Good. That is a good sign for today. But how do we find the breakout level? Well, if we look back and look left, right? Zoom out, look left, we can see that there was a major resistance at this 291. Now we can see when we come up to around 290 to 291, we've been bouncing our head off of it for about a couple weeks now, right? Every time we come up about 291 to 290, right? Reject, 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 right? We keep bouncing our head off of this. So this is showing me that this is a huge resistance level, right? A huge resistance line. So 290 to 291, a very, very big resistance, a very big supply zone. Now, if we break something like this, right? So if we keep rejecting off of something, and so likewise, if we keep bouncing off of support, eventually we're either going to fall all the way down, or once we break out of that, it's going to break. It's going to go, right? Think about it as every time we hit into the zone or this level, right? It's being defended. Every time we're coming into that defense, right? We're taking away part of their army. We're taking away part of their defense. So every time we hit it, right, that defense gets weaker and weaker and weaker. Now, in this instance, right, we kept trying to hit that 290, 291 level, getting weaker and weaker and weaker. So today, 290 would have been a good level that you could use, but I like 291. And the reason for 291 here was because that was the most recent high and the biggest resistance that we just had, right? This 291 level, we could use 290, but really this 291 level was that ultimate resistance that if we got over, we're going to go trade to the next level, right? Our next level up. Because let's go back to the beginning of this video. What do stocks do? They trade level to level. So now this 291 level is what we're going to use as our breakout level, right? We got on the 1 hour, we marked it. Now we're going to go down to the 5 and 2 minute. Perfect. So now we have our strategy here. So again, we are above the 200 blue line right here. Cool. We're bullish to start the day. Another thing, like I said on the 1 hour, this 285 was a massive level. We're holding it as support. So if we're holding it as support and we can't break below a level, we're probably going to head up. So a stock can tell you where it's going to go most of the times by telling you where it's not going to go. A stock is going to tell you where it's going to go oftentimes by telling you not where it's going to go. So if it's holding this as support and it can't break down, more likely we're going to go to the next level up. So we're above the 200, right? We're bullish. Check mark. The 13 crossed the 48. So this green line is the 48. Green line, the 13 is this green line. The 48 is this red line. We got the cross. Boom. All right. Another bullish side. Now we broke above pre-market high. Bullish. And now we're breaking above yesterday's high. So now we have all of these bullishes, confluences for us going our way. Now, another thing with the stock today, especially, was the thread news. So we had news on it, good news on it as well. So with all these bullish confluences, and especially with the news added to it, we had massive momentum, massive move up, right? So we can see this momentum taking place on this stock. So all of these things put together, right? We got to look at always the bigger picture. What is happening at this bigger picture? We have all of these things put together. Now, the next thing we want to look for at our level was a break and hold. Now, I get so many questions about this. How do you play a break and hold? Well, simply put, we break out a level and we hold the level, right? We want to see a full body candle close. Now, one thing, if you want to get a better entry or you have more experience, say you review these type of trades over and over again, we see the momentum. We have all these confluences like we just talked about. We have the news. So when we break, We have the volume following us. When we break and hold here, we can take that break and hold initially right at that break and retest, right? So we broke, retested this level, held it. Now that risk reward is definitely still up. Now, when you take that entry with a full body candle close above the level, we sometimes can get not so great of an entry, right? The stock has broken up. There's a big candle up. And now we're trying to take an entry up here because we waited for that full body candle to close. Now, it is a good sign to wait for a full body candle to close. But personally, I think it is better. How I do it is wait for a full candle to open up above the level. And that's where I take my risk reward there. Once we break above and we have that back test right here, and we have that candle body opening up above the level, my risk reward is there. I'm going to take that trade all day long, especially with all these confluences, right? Especially with the volume, especially with the news, right? All of this is here making us an A plus setup. We broke above pre-market high. We broke above yesterday's high. And then we have all of our EMAs going for us. Now, one thing that these EMAs do, for one, is that it's showing you if we are bullish or bearish, right? It's giving you that. But another thing is it can show you a trend. Now, when we see these EMAs start to diverge like this, right? They pull apart, diverge, pull apart, right? You can see that here. That's showing you that a trend is forming. Now you guys can see a range right here. Perfect example. This is not a trend right here. And now we can see all these EMAs bunched together. So this is what I mean when I talk about putting on the training wheels for you and understanding price action, right? So we have obviously showing you what is bullish, what is bearish by them. But another thing that these EMAs do is show you if the stock is starting to trend or not. Now, as a newer trader or a struggling trader, knowing when a stock is trending or not trending is definitely one of the more difficult things to understand, of a concept to understand. So what these EMAs do is this divergence, them pulling apart, is actually showing you that a stock is now going into a trend, right? And what do we want to do? We want to trade trending stocks, whether they're up or whether they're down, right? We want to trade a trend. We don't want to trade something that is in a range, right? We don't want to trade something that is in a range. So when we're seeing EMAs bunched together like this, that is showing you that it is in a range, right? We want to see these EMAs really diverge. Now you will get to a point where you have just volume and you just have your levels, right? And you just have your levels. So all you're doing is just looking at a chart like this, right? But for you guys, this is why I created this strategy. You guys can see here's technically a naked chart, right? Can kind of get confusing. Do I take the entry? Do I not? Do I do this? Is it bullish? Is it going to hold? Right? When we add those EMAs, you can see how they are training wheels and they really, really help you guys out. Understanding, is it trending? Is it bullish? Is it bearish? Right? All of these things really help you. So you guys can see why I created this and how the EMAs are actually train you to read the price action. So now we've gone over the strategy, gone over the EMAs we use, why we use them, how to use them. We've gone over the break and hold, gone over how to find the levels. The last thing I want to go over is the 8 EMA, the trend, right? So how to trade a trend, how to stay in a trade for as long as possible. Now, when we stay in a trade for as long as possible, it doesn't mean hold the complete position as long as possible. Doesn't mean that. It means we can hold runners. We can hold runners and sell off into strength, right? We could sell off when we're getting strength up. So how to hold into a trend is I like to use the 8 EMA. Now, let me show you the 8 and the 9. They are very similar, as you can see here. Very, very similar. I know a lot of people like to use a 9 EMA. That's great. I like to use the 8 when we're in a trend. You can use both, right? You can use both. And typically the 9 is below the 8. So we can use the 9 as the last defense. So if it breaks below this 8, we could use this 9 EMA as the last defense. So what are we doing when we're holding a trend or seeing how long the stock is trending for before we would sell out and the trend breaks, right? Now, what I like to do mostly is use the 10 or the 15 EMA, right? The 10 or the 15 EMA. Why do I like to use these? Because it's showing you the higher time frame. They typically can let you stay in a trade longer. Why? Because we could see here that the stock never broke below until the end of the day, right? We never had a full body candle closure. So that means the entirety of a body closed below our trend level, which would equate to the trend breaking, right? We didn't have that happen until almost the end of the day. You can see here on the 15-minute would let you hold, right? Some runners into strength all the way until the end of the day. So we didn't have a full body candle closure until about 1:15 on the day. Now, if we go back to the 5-minute time frame, we can see that we have a full body candle closure, right? Very, very early in the morning. So we had one over here, right? On the 15-minute, we had our first one over here super early in the day. So you can see if a stock stays trending and it pulls back a little bit, but then trends up again, you can see how big of a difference the larger time frame makes. We'd be out of the trade here, whereas over here we're out of the or as on a larger time frame, we'd be out of the trade here, right? Big difference. So always look at the larger time frames. I like to use the 15-minute to see the trend. Again, we use the 8 or the 9 EMA for our trend, and we wait till a full body candle closure below level to cut, since that is the trend breaking, right? But again, please look at the larger time frames like the 15-minute. When you're in a trend and you're selling runners, it will definitely help you stay in the trade longer. Now, I know this was a big video, but if you made it to the end, thank you guys. Try to throw a lot of information out at you. There's tons of videos on this strategy already on the channel. So go ahead and check those out to search BBR strategy and you can easily find them. But again, my name is Mr. Banks. Thank you guys. If you have any questions or comments, drop them in the chat. I appreciate you guys for coming out, spending your time with me. Again, I am in the Wolves of Wealth Discord. If you guys want to join, I would love to see you guys in there. Have us all become consistently profitable traders. I will see you guys next time on another trade recap. Enjoy your evening. Don't do anything stupid tomorrow. I will see you guys next time.